Hey everyone, Marcus here with Simple Jack Trades. Today I'm going to be going over how to paper trade using the Tradovate platform. So there's two types of trading that you can do when you're set up with Tradovate. If you've put actual real money into your account, you can trade that real money, which means that you can either win real money or you can lose real money. The other kind of trading is demo trading or paper trading. And what that means is you're trading the real market, and it's live price action that you're actually trading, but it's a pretend account. It's a paper account is what it's most commonly referred to. So the purpose of that is if you're new, let's say less than a month into your trading journey, use your paper account so that with the inevitable mistakes you're going to make with executions or just learning how to trade in general, how to read price action in general, you're going to make mistakes. So you don't want to put your real funds at risk, especially when you don't fully understand what you're doing. It's like it's a practice court for you to get familiar with how to enter trades, how to exit trades, how to set stop losses and profit targets, and just to get more familiar with the actual tools that you're using. So I typically trade on TradingView, which my broker is Tradovate, but I use the TradingView platform to execute my trades just because I like the charting better. But if you're not set up with TradingView, that's okay. You can just use Tradovate to actually execute your trades and to just use your demo account. So let's jump into it here. So I'm on the Tradovate login page, and I'm just going to click login. And you're going to see three options here. You're going to see the live trading, you're going to see market replay, and you're going to see simulation. So if you want to do demo trading or paper trading, you want to click on simulation launch. Okay, it's going to load up. For me, it's a blank screen right now because I just removed everything from the interface. I wanted to show you guys how to actually bring up a chart. But the most important thing, or the first thing that you want to see here, is it says this is a demo account. That's how you know that it is not real money. It says I've got equity of 49,237.72. That's not real money. I edited that balance, and I think I took a losing trade one day. But this is what you want to see if you want to be trading your fake account, your paper account. You want to see it say demo up here at the top. So what I'm going to do is I'm going to add a chart. So up here in the top left, there's a plus button that says add modules when you hover over it. So you click on that, and then you can click and drag the chart to wherever you want. Since there's nothing else on the screen, it's just going to take up the whole screen, which is just fine. And then you're going to want to search for a symbol. So the two tickers or symbols that we use mainly are for the S&P 500 futures. One is called the mini contract and one is called the micro contract. We're going to add the mini contract, which is ES, and typically the first one that comes up is going to be the current contract. So it's the ESH4 right now. Okay, and then click select. And then you're going to see all these lines. I have my chart set up where my up bars or my bullish bars are blue and my bearish bars are red. That's just my personal preference. The green's a little bit harsh on my eyes. There you go. So let's say I want to enter a trade from here. Again, this is on my demo account. It's pretty simple. If I want to enter a sell limit order, which is an order for price to come up to my price, and then I will end up going short or selling a contract, I want to find a price above the current price. So right now we're at 49.1075. And let's say I think the market, if it comes up here, it's going to end up going down. I think this is like an area of resistance. So I think if price comes up to this area of resistance, that it's going to come back down because this area is just too strong to get through. So I'm going to go up here. I'm just going to left click. I'm going to click sell limit 1. So if price comes up to my sell limit order, I'll be in short. So if I get here and price goes down, I'll be making money. Okay. If I want to go long, I would do the opposite. So if I think that this area down here, we got a little bounce right here, a little bounce right here, a pretty big bounce right here. I think that this area right here is a strong area of support. I want to buy. I'm going to bet on price going up when price gets down to this support area. I'm going to put a buy limit order below the current price. Current price is $49.10.50. I'm going to just left click here and click on buy limit. Okay, so if price comes back down, and it might just do it here in a second. So if price comes back down, touches my order, sometimes it needs to trade through it for my order to get filled. But if it does that, then I should be long or in one buy contract. That means that I'm betting on price to go up. And it'll occasionally happen like this where price will touch your order price and it won't get filled. That just means that it didn't actually trade into the price. There's a lot more that goes on to that into that as far as the bid and the ask and liquidity in the product or in the symbol that you're trading. But just know that sometimes that can happen. So we'll just give it one more second here. Okay, so then I actually traded into my price. My order turned blue and it says +1. That means I'm long one contract. Okay, so if price moves up from my current price, so anything over 49.10.00 means that I'll be winning. Unfortunately, it just went down to 49.09. So anything under 49.10.00 means I'm losing. So you can see my open P&L, my open profit and loss is negative 12.50. Okay, I don't want that obviously. So let's say I just wanted this to immediately go in my favor. I would just click exit at market and cancel. That's what those abbreviations mean. Exit at market and cancel. That means it's going to take you out of all of your open positions, and all of your pending orders on the screen will be canceled. So let's put some pending orders on the screen so you see how that works. There's a sell limit order here. Let's put another buy limit order here. So I'm +1. I'm long one contract. I have a sell limit order up here to sell if price gets here. I have a buy limit order here to buy if price gets down here. But if I click on exit at market and cancel, everything disappears. And this orangish line is just the line for the current price. Okay, so I ended up, let's see, let's go click on this drop down here. This will show you your stats for the current session. So my total equity went down versus where it originally was. Open P&L, if it's at 0, that means either I'm in a flat position or I'm not in a position at all. And then it says that I lost a total of $17.48. So every single tick on the S&P 500 E-mini futures, every single contract per tick is $12.50. There are 4 ticks in every point. So from 49.10 to 49.11 is 4 ticks. Okay, that's 0.25, 0.5, 0.75, 11. So every tick is worth $12.50. Every point is worth $50 because $12.50 times 4 is $50. Okay. That's pretty much it as far as placing orders. You can also place another type of order. It's called a stop order. And the way that these work is if price goes through your stop order, it's going to enter you, if you use it as an entry order, it's going to enter you into the direction of your stop. So let's say I think that this area of support is going to give out, and if it gives out, we're just going to continue to break down through the bottom. Okay, we're going to continue to move down. So I want to sell if price breaks down through this area of support. So price is right now at 49.0975. I think if it comes down here to 49.0925, it's going to keep going down. So I'm going to do a sell stop order. Okay, that means if price comes down and touches this order, it's going to sell one contract. That means I'm going to be negative one contract. I'm going to be short the E-mini S&P 500 futures. So if I'm selling a contract and price goes lower than my contract, that means I'm going to be in the green. That's good. Okay. Same thing on the opposite side. If you want to bet on price breaking through a certain price and continuing through it, you would want to do a buy stop order, right? So let's say I think that if price comes back up and breaks this little peak right here, that it's going to continue to go up. I would use a buy stop order to get long the E-mini futures. Okay, so that means that if price comes up through 49.1112, I'm going to be in long, so that's plus one contract. So everything over my current price will be profit for me, and everything under that price will be a loss for me. Okay, so those are buy stop and sell stop orders. One thing that you definitely always want to do is set a stop loss. So we can enter a position immediately. The way that you do that is you can use a buy market or a sell market. Okay, if I think from right here price is going to continue to go up, I would use the buy market button. And you see I've got a filled order. I'm plus one from 49.1075. So everything over 49.1075 is profit for me. Everything under 49.1075 is going to be a loss for me. Okay. One thing about futures is if it moves against you, and I guess vice versa, if it moves for you, you can make a lot of money real fast, or you can lose a lot of money real fast. So you never want to leave your position unprotected. You always want to have a stop loss. So if I'm in a plus one position, if I'm long one contract, in order to get out of a contract that I bought, I would have to sell that contract. So I need to put a sell stop order below my entry point. Since I'm long, since I've bought one contract, in order for me to exit at a certain point, I need to put a sell stop order on here. Okay, so that means if price comes down to here, it's going to sell the contract that I bought and get me out of the position for a loss. Now, nobody likes losing. It's definitely just part of trading. Nobody has 100% win rate. Our simple jack strategy runs at about 80 to 85% win rate, which is incredible. You're not going to see a lot of losses using that strategy, but nothing is perfect. Nothing is 100%. You never want to risk more money than you want to wager on any particular trade. You never want to risk your whole account on any trade, and that's why it's important that you always set a stop loss when you're trading. With the simple jack strategy, we give you all your stop losses, so you don't even have to think about where to place that entry order or your exit order for a loss, or your profit order for your target. Speaking of targets, let's say I want to get out of this trade at a certain point while I'm in profit, right up here in this little area of resistance. What I would do is, since again I'm long one contract, I would place an order of a sell limit up here. So I'm selling a contract to get out. Okay, so I've got my entry, 49.10.75. I've got my stop loss, my sell stop order at 49.09.25. So if I get down here, I'll exit for a loss. I've got a sell limit above my price at 49.12.75. So that would sell my contract for a profit. Okay, works the same way going the other direction. So let's say I'm short one contract. Okay, 49.10.75. I want to protect my short order with a buy stop, let's say above here. Okay, so I'm betting on the market going down from 49.10.75, but if it goes too far up, I'm going to get stopped out up here at 49.13.50. Okay, and then just like I did with the long order, I want to have a take profit, let's say somewhere down here. So I'm going to do a buy limit down here. So if price comes down into this buy limit order, my trade will close out in profit. If it comes up to this buy stop order, my trade will stop out for a loss. Those basically the fundamentals of placing trades and executing trades. However you decide to trade, if you like to do market orders, if you like to do limit orders, you like to do stop orders, or you use them in different situations, is up to you. But it is very important that if you are trading, you understand what all of the orders do, because if you don't, it could lead to some losses that you never needed to have taken in the first place. So I hope this video was helpful. If you guys have any questions, please reach out to our moderators or admins in the Discord group. If you haven't signed up for the Discord group, there's a link in the comments below, in the description below. And you can follow us on Instagram with our link also in the description below. Take care, guys, and I'll see you online.